You may use headphones for better understanding. Here I am trying to give maximum content in a minimum time frame. Welcome to our video on how to build a strong investment portfolio. Investing your hard-earned money can be an overwhelming process, especially when you don't know where to begin. However, it's important to build a diversified investment portfolio that aligns with your financial goals and risk tolerance. In this video, we will discuss the principles of building a diversified investment portfolio, offer tips for selecting and managing investments over time, and help you create a strategy to grow your wealth. Principles of building a diversified investment portfolio. The first principle of building a diversified investment portfolio is to define your investment goals. This includes setting financial goals and determining your risk tolerance. Once you have a clear understanding of your financial goals and risk tolerance, you can select investments that align with your investment strategy. The second principle is asset allocation. This involves diversifying your investments across different asset classes such as stocks, bonds, and real estate. The goal of asset allocation is to reduce the risk of loss by spreading your investments across different asset classes. The third principle is diversification. This involves investing in a variety of assets within each asset class. The goal of diversification is to reduce risk by investing in different companies and industries within each asset class. The fourth principle is periodic rebalancing. This involves adjusting your portfolio periodically to maintain your desired asset allocation. Rebalancing helps to minimize risk and ensure that your investments remain aligned with your investment strategy. Tips for selecting and managing investments over time. When selecting investments, it's important to conduct thorough research to understand the risks and potential returns. You should also consider the fees and expenses associated with each investment. One tip for managing investments over time is to set up automatic investments. This involves setting up a schedule to invest a fixed amount of money regularly. Automatic investments help you stay disciplined and consistent with your investment strategy. Another tip is to review your portfolio regularly. This involves monitoring the performance of your investments and making necessary adjustments. You should also periodically review your investment goals and risk tolerance to ensure that your portfolio remains aligned with your financial goals. Conclusion. In conclusion, building a strong investment portfolio requires a clear understanding of your financial goals and risk tolerance. By following the principles of asset allocation, diversification, and periodic rebalancing, you can create a portfolio that is aligned with your investment strategy. Additionally, by conducting thorough research and reviewing your portfolio regularly, you can manage your investments effectively and achieve your financial goals. Thanks for watching. For personalized financial planning and wealth management, you can contact us at the below given number. Disclaimer: this is only a knowledge-sharing effort from my side. In this video, I am not giving any financial advice. We believe financial advice should be personalized. For financial advice, you can contact your financial advisor.